You can get a copy of my free ebook, Technical Analysis Basics, with one click. There is a link in the description box down below. So maybe you're new to technical analysis or you've been using it a while. There's a series of articles in this book that'll get you using some more technical analysis tools pretty much right away. It's written for beginners to intermediate, super easy to use.
Hi everybody, this is Lara from Pure Elliott Wave. This is an impromptu, really quick little video of the US dollar index. I've just opened up my chart. I'm using FXCM data and my wave count looks like it was pretty good. So while I update my chart and ready it for publication for you, I'm just going to go through and talk you through how I'm thinking. And I've received a question from a member with his wave count and he's asking me for feedback, so I want to have a look and see how it all fits in. So I'm just going to, well, first of all, I notice that this trend channel that contains the bull market, which began back in February 2021 and looks like it's reached a high in September 2022, has been very clearly breached by downward movement. So I'm going to get rid of that. That's indicating a trend change. Let's get rid of that. Target that arrow. So it looks like, where's the high? Is it here? Yeah, it's here. My first target was 13,524 and it reached 13,557 and then turned around and breached the channel. So that's pretty good. That's pretty close. That's what, 33 short? And my target was 33 over. Sorry, the price reached 33 over the target. So that was some pretty decent analysis, I think. Okay, so that's no longer applicable because intermediate 5 is over. So now the question is primary 2. Is it over? And the first thing we need to do is bring a channel around it. And I can see an Elliott channel isn't going to work, so we'll do a best fit channel. That looks pretty good and that's quite conservative. It contains all of this movement. Let's pull that down to sit across these lows, this one and this one perfectly. So now the question is, what structure is primary 2? I'm just going to check this high, 13,557, and this high exactly the same. So that's a 100% correction for the very first correction in there. Let's get some labels on here. Most likely to be a zigzag, but no, I think that would be a bit brief, wouldn't it, for intermediate A? So I think we've probably got 1, 2, 1, 2, 3, 4, 3, 4, 5. So I think intermediate A may or may not be over down here. And then intermediate B may very well breach a channel containing A. So that channel may yet need to be redrawn. Now this is what I can see. A third wave in here. Yeah, that looks really good. Oh no, actually hang on, I think we might need to put this here, and then intermediate A could have been over down here. This could be intermediate B, and so that channel may actually hold. I'm going to save that, and real quick, let's do a daily chart, because I haven't got one actually for US dollar index. Okay, well I can see a couple of little problems with this wave count, but I think we might be able to resolve them, although I'm not sure if I'm going to be happy with the resolution I'm thinking about. Looks like minor wave 2 is a zigzag. No, I think I'd put A there, and I think I'd put B here, some kind of combination probably. You'd want to go down to a lower time frame to check those subdivisions, but it's a B wave. I'm not going to waste my time now. It's obviously over, so let's leave that as it is. I've redrawn this channel from minor 1 to 3 with a copy on 2. And apart from a tiny overshoot here, that contains all of this movement. Now I see, oh, actually, no, this actually looks okay. Okay, I think I can label an impulse here for minute 3. Yeah, that looks good. Minute 4, I don't know, some kind of combination. Or double, yeah, that's a double combination, okay. No. Wrong labeling, Lara. Get that right, thanks. Combination. So I think there's a zigzag for minuet W, zigzag for X, and I think minuet Y will probably turn out to be a regular flat. Yeah, I think B will be, let's expand this out so we can see those numbers. B is 52, A is 55. Yeah, B is more than 90% the length of A. Yeah, it's 94.5%. And so minuet Y could be a regular flat and the whole thing moves essentially sideways. Y is ended short of W. That's okay. It usually ends about the same level as W for a combination. But so long as it doesn't end substantially beyond W, this is okay. So zigzag, X, regular flat. That looks pretty good. I'm not sure about -5. It looks like a three-wave structure, doesn't it? You'd have to check lower time frames to see what that could be. Nope, I want to put A there and B, probably here. What's this low? 12.830 and this low. 12.828. I don't want to see any. No, I think okay. Oh, crikey, I don't know what's happening in here. It's obviously over. I'm not going to waste too much time on this. I want this to be super short. I'm going to have a look at my members wave count that he's emailed me and just see what he's come up with and see what I think about that count. Before I go there, let's have a look at some classic analysis. So at the high here on the weekly chart, there's a bearish engulfing candlestick pattern. Support, which was 12.956, has been breached. Next support below 11.568, quite a long way away. At that high, the bearish engulfing candlestick pattern did have a little push from volume as well. Compared to the previous week, volume increased on the bearish week. So because volume increased week by week, even though it's lighter than previous weeks, if it increases from this week to this week, the bearish candlestick reversal pattern showed an increase in volume. So that's quite impressive to see. The last completed downward week shows a further increase in volume. This is very bearish. On balance volume, look for a breakout above resistance. The signal would be bullish. Below support, a signal would be bearish. No signal from on balance volume. And it did make final highs with price on a closing basis. RSI reached fairly deeply overbought and exhibited double bearish divergence from this point to this point to this point. So that's a harbinger of a big trend change, and that's what we've got now. It's still in neutral territory. It's not oversold. There's no bullish divergence. There's still room to go before conditions get oversold. ADX is still declining, not indicating a trend. This is based on a 14-week average, so it's going to take a while to catch up if there has been a trend change. Pretty much most indicators are lagging indicators because they're based on past data. So it's one of the drawbacks, obviously, of technical analysis. Money flow index reached overbought and indicated single bearish divergence. That's still neutral, still a ways to go. And ATR showed an increase throughout this bull market, now starting to show a decline in this bear market. I think that's probably quite normal behaviour. And so I think there's still a long way down to go. Let's pull a Fibonacci ratio in here and see what's a potential target for support for primary wave 2. My target for support in the first instance, 12.291. And if price gets down there, I would expect to see oversold conditions, but probably not an extreme trend, maybe on the daily chart, but not necessarily the weekly chart. And at 12.247, intermediate C would reach equality in length with intermediate A. So I have a small target zone for support. And I think FXCM is giving you these numbers in pips rather than US dollars. And so that's my target zone for support, and I expect US dollar index to continue falling for several weeks, if not another couple of months or so, before eventually the bull market resumes. And the next bull market I would expect would be a third wave at primary degree within a third wave at cycle degree. So the next bull market up for this market I would expect to be particularly swift and strong, with a strong push from volume. So that's it for my US dollar index update for you, and this is what I'm doing, having fun with breakfast this morning. Okay, so another thing coming up, I'm going to be presenting in the next FX Traders Edge Elliott Wave Forecasting Hub event. So there's a webinar coming up, I think 16th of February. I'll be giving you a link for you to sign up for it soon as they give it to me. and trying to promote people to sign up for that, because the more of you who sign up, the more people I get viewing the webinar that I'm preparing, the better it is for me. I've also realised recently, how naive am I, that webinars generally are like glorified sales pitches. How did I not know that? But okay, I've watched a couple that I was interested in, figured out they're just really a big sales pitch, and not really that interested in them anymore, to be honest. I don't do that. I virtually do no marketing. I'm terrible at it. I don't know how to do it. I just keep giving you guys free content. That's just what I'm doing. That's my marketing. So for this FX Traders Edge forecasting event, I'm going to be showing you how I'm using Elliott Wave and classic technical analysis to support my Elliott Wave to look for buying opportunities. I'm looking for the end of the bear market in the US indices coming up soon, I think maybe in the next 1, 2 or 3 months, and I'm going to start looking at stocks that I want to buy to hold for a long-term investment. I don't trade. I hate trading. It just doesn't suit my personality. It turns out I tried it for quite a while years ago and moved from short-term day trading to swing trading to eventually giving that up altogether and just buying and holding for a long period of time. I've done that in the New Zealand stock market quite successfully, and I began buying cryptocurrency back in early to mid 2019.